Walmart's reporting. Can't wait for the revenue number. I always like that. I always like to see the revenue number at Walmart. Courtney Reagan joins us with the numbers and comments from the company's CFO. Hey, Courtney.
Hey, yeah, the revenue is a big whopper, this one, Joe. So for the holiday quarter, Walmart did, though, miss earnings expectations. Adjusted earnings coming in at $1.39 per share, although that includes a 7-cent impact stemming from a UK tax issue. Consensus was $1.50. But revenues, like I said, much stronger than expected, $152.1 billion versus estimates of $148.3 billion. It's also reinstating guidance, looking for sales to be up low single digits this year and earnings to be flat to slightly up. But those U.S. comparable sales up 8.6%, well above estimates, and that's not even the strongest number of the year. As an essential retailer, Walmart played a big part in this pandemic. U.S. net e-commerce sales grew 69% for the quarter, 79% for the year. I spoke with Walmart's CFO, Brett Biggs, who said, quote, the e-commerce contribution margins do continue to improve. So that's good news. Biggs also told me, quote, we're in an unbelievable financial condition, a great competitive position. And now's the time to be even more aggressive with our strategy. And you're going to see us increase investments. So Walmart is targeting $14 billion for this fiscal year's capital expenditures. That's up from a rate of 10 to 11 billion. The increase going mostly towards supply chain, automation, all things improving the customer experience from that omni-channel view. Walmart is also raising its average employee wage to $15 an hour. Starting pay, though, does remain at $11. And when it comes to stimulus, Biggs said, quote, when money hits, we see spending pick up pretty quickly. And I would anticipate if we get another round of stimulus, which is obviously being debated, that we would see something very similar. Becky, back over to you.
Oh, thanks, Court. The stock is down by about 2.6%. And again, people are just kind of going through this. There were a lot of stronger than expected numbers. What kind of stood out to you as something the street might see as bad news?
I mean, there was a miss on the earnings. $1.1 billion spent in COVID costs. That actually wasn't even the biggest quarterly cost for the year. I think it was in second quarter they spent $1.5 billion. Maybe they were expecting a little more when you're looking forward to next year when they're saying earnings were going to be flat and sales up, low single digits. They're going to have a pretty big investment period here. And remember, there's an investor day, Becky, that starts at 8 a.m. So there's going to be a lot more detail for what they're going to go through with the year. We know Walmart's looking at sort of alternative businesses, I would call it, for a retailer, talking about amping up advertising. They've gotten into healthcare by offering insurance and some healthcare centers. So still some more details through there that I think investors are going to need to know a little bit more about, because it does take away a bit, supposedly, from the core business. And remember, Mark Lowry is gone now. So what does that mean for online innovation?
Shepard Smith here. Thanks for watching CNBC on YouTube.